Okay, guys, let's go ahead and start. I know I have you guys muted right now, but now is the time if you want to unmute yourselves and talk. I do prefer these to be a little bit more conversational. If you can't hear me, feel free to interrupt me, say you can't hear me. If anything's unclear or you have a question, drop it in the chat or just unmute yourself and let me know. I'd be happy to answer any questions. All right, all right, let's go ahead and start. Go ahead. If hope you guys can all see my screen here. All right. So we're going to be going over supply and demand zones, what they are, how to find them, how I draw them, and what everyone's probably here for, how to trade them. And we do have some really, really good trade examples at the end. We have about 5 to 6 trade examples. And I do plan on going over the charts at the end and trying to find some live trades like on crypto. I have some Ethereum zones marked up. If you guys have BingX, go ahead and pop that on at the end of the presentation because we'll go ahead and try to find some crypto trades because crypto is popping right now. All right, so let's get going. Supply and demand zones. So we're looking for areas on the chart where large limit orders or institutional buy orders or sell orders may be held up. Because institutional traders and professional traders, they'll leave their limit orders in for months, right? Price naturally gravitates towards liquidity, whether that be limit buys, sells, market orders, or yours and mine stop losses. I'm sure you've gotten stopped out before and it kept going. That's just price gravitating towards your liquidity, and not just yours, but there's going to be a lot of stop losses where yours is. So, if there's a large demand for 1 million shares at $100, price will naturally gravitate towards that $100. If there's a large supply of 1 million shares, they all want to sell for $200, price is going to go towards that $200 and get that 1 million shares off. It's kind of like an auction house. So to trade these zones, you got to think like the institutions. You have to be patient and only take the trades when they come into your zone. When the price comes into your zone, it's going to present you with the best risk to reward. And that's what our job is as traders. Money is secondary. Number one is managing risk, right? We want to keep our risk really small. Trust your zones, right? These are areas where price likes to move in a big way, one way or the other. Your zones are going to help you capture the meat of the move. I'm sure you've looked at a chart and you've gotten in the middle of a move. It's been trending all day, and you're just trying to capture a little quick breakout and scalp that 20%. You're wondering to yourself, man, how could I have gotten in at the very beginning of the move? Well, that is where supply and demand is going to come in and help you capture the whole move. That's what this is about. All right, keep going here. So I got some examples on the screen. So this blue area on top, this is going to be the zone. As you can see, price entered the zone, rejected, and came down. This move right here could have netted you a good amount of money. Right here, this is the 3-minute time frame on SPY. As you can see, price entered the zone, didn't even, it hung around for a little bit and skyrocketed off, right? Same thing here. Right? Price came up, entered the zone, and this gave you, this is a 3-minute time frame. This gave you 3, 6, 9 minutes to get into this trade. And you could have gotten in right here and bam, profit the whole way down, right? This is how you capture the meat of the move. See right here as well. You always wonder, man, how do I get this heat? How do I get these huge drops? Supply and demand. It's because these are areas where there's a large amount of liquidity, and price will gravitate towards that liquidity. All right, now you can find them on any time frame, right? But the larger the time frame, the stronger the zone. I personally find my zones on the 1 hour, the 30-minute, and the 15-minute. The 1 hour is my favorite time frame to find my zones. I just find that they tend to hold up the best. But for swing trading and for crypto, I look for them on the 2 hour, the 4 hour, and the daily time frame. All right. Let's keep going. Oh, so we reached our first live charting example. I'm just going to show you guys a real chart here. We'll go on SPY, our favorite ticker. And we'll just find, even today, oops, sorry about that. All right, and we'll go on to the 10-minute time frame here. And we'll just see how well these zones work, how well they could have paid you. Right, let's go back to yesterday, right? Here's the open. You could have gotten right in open, took it from zone to zone. Got in right here, taking it short, zone to zone. These are multiple, like if you're trading options, right? We're options trader mostly. But even if you're trading futures, this is a pretty nice scalp, right? But you know, if you're trading those 0 dates, these are the moves you want to get, especially if you're in those 0 dates. You don't want to enter a trade when you're in the middle, right? Let's look at today. Today was just a huge rally floor. You could have never got in. But if you're a supply and demand trader, you could have got in here. And, you know, you could have ignored all this, and you could have gotten here. Ignored all this, and you could have gotten right here. Right. These zones will hit. They'll pay you. Look at this, right? We had the double top yesterday, right in the zone. These are 10-minute candles, by the way. You could have got in right here, captured the whole meeting of the move. And even if you felt like you missed it, look where we consolidated right here. Remember, this is a 10-minute time frame. We consolidated here for 10, 20, 30 minutes, and you could have gotten a position right here and wrote it down. And again, right? So this is how you capture the meat of the move. If you ever look at a chart and wonder how you could have, you know, gotten at the beginning, it's going to be supply and demand. All right, let's go back. How to find zones. Let me see. I got some English chat here. Oh, what's up, Quinn? How you doing? Let's see here. How to find zones. The fun part. So I'm gonna go over how I draw my zones. I start on the hourly time frame and I turn on regular trading hours. The reason I turn on regular trading hours is because, you know, the theory, the algorithms, they don't turn on until, you know, the market opens. At least that's what I believe. So I turn on regular trading hours, and I look for areas where price reacted strong to the upside or the downside. Right here, we can see price reacted in a big way to the upside. So the zone was drawn right here. Right here, we can see a big move to the downside, so the zone was drawn right here. All right, let's look at this example here. And we'll go zoom in here. Ideally, you want to capture both upside and downside in your zone, right? So let's look at the zone right here in the middle. All right, I want to draw your attention to this right here. We captured, boom, downside. We captured this rejection as well. We captured upside. Price did its thing, came back down. We captured upside again, right? Right here again, we captured upside. Right here again, we captured upside. So just in this very zone, we captured 2 strong downside moves and 3 strong upside moves, right? So ideally, you want to capture both in your zones. So that way, when price enters your zone, you're not really biased, right? You know that, you know, this isn't, you know, you don't slap calls as soon as we get in here. We know the price is going to react either, you know, one way or the other in a big way, right? So ideally, your zones will have both. If you find that your zones are too big, or you're having if you're having trouble locating the origin of the move, we move to a smaller time frame. And I got some examples set up for you guys right here. So in this example, Google started this huge uptrend, right? Here's the candle in question. And you can't really, here's the wick, you can't really draw a zone on this candle, right? So we'll move to the 30-minute. And right, we kind of see it's a little bit more clear, but not really. So we move down to the 15-minute and things kind of become more clear. So what we did, I'll draw your attention to over here, is draw a zone from the bottom of this candle, the bottom of the wick, to the following wick, to the next time we bounce, right here. All right, if that's making sense. If this isn't making sense, please just unmute yourself because I can't sit here. If it's not making sense, just unmute yourself, please. Any questions, just ask. If not, I'm gonna move on. I have another example here. All right. So in our next candle, we're looking at IWM. This is one of our favorite indices to play, especially with a smaller account, right? You like IWM. So we're looking at this candle, this hourly candle that started this huge candle of the upside, right? But the wick is so small, it really wouldn't make sense to draw a zone here. It's only be so small, right? So what we're going to do is investigate this candle. It's the candle in question. Let's take it down to the 30 minutes. Here's that same candle. You kind of see what's going on, but you know, not, you know, it's kind of the story is still kind of unclear. So let's take it down to the 15 minutes. Right now, things become more clear. So here's where we drew our zones, right? We started at the bottom of this wick right here, right? And we took it to the following wick the next time it bounced, right? On the 15-minute, we found it from here. We took it from the bottom of the doji's wick, the pin bar, you know, this indecision candle, and we took it to the following wick, you know, where price bounced. These are how my zones at least tend to be really, really accurate. If you look at my charts, you'll be like, wow, this full zone be hidden. This is why I always try and look at the whole picture and I take it to the next time price enters the zone. All right. Oh, so let's find some zones. Let's find some zones on Exxon. I was looking at this earlier and I like the price action. So here's Exxon. Let me just hide all my indicators. So we're just, all we need to look at is price action. All right, so that's on regular trading hours. Let's move to the 1 hour. And let's find some zones. So right away, what sticks out to me is this move right here. This is actually from a couple of, this is our most recent price action, right? So I want to want this move. So what I'll do, take a rectangle, and I'll take it from the top of the wick just to the bottom, just to the start of the body, right there, right? And I don't really need to look, but I'll just take a look to the left, and I'm sure we found some good stuff. As you can see, price really likes to react in a big way when it reaches this zone, right? So here's a zone that we found to the downside. Let's find a zone to the upside. All right, so we'll do this one. I see this one as well, but I want to show you guys this one because this one is just going to be another standard zone. I will just take it from the bottom to the top here. This one's a little different. I'm going to take my rectangle. So notice it started from here, this huge move up, but I'm looking at the next time we bounce. Because I'm looking, and the next time we bounce, it doesn't take the whole way. The next time we bounce was actually this strong candle right here, right? Now, again, I really don't need to look to the left because I'm so confident in my zones, but let's check it out. Look at the left, look at the last time he came here. Huge bounce. Look at the last time he came here. This huge rejection. What a coincidence right here, right? I mean, come on. Come on. Let's keep right here. Look at that. Next time he came here, look. So already, just this one zone, we caught upside. Caught this huge catch upside. We caught this huge downside, downside, downside. This is what I mean when I say, you know, you want to ideally capture both in one zone. That way, you know that, you know, there's a lot of good price action. All right, let's keep going. How to draw zones. We kind of just went over this, but I want to go in a little more detail. There's really no wrong way to draw your zones. If you understand the fundamentals behind them, they're really highly customizable. You know, what that means is as long as you know that your zones are capturing areas where a big move happened, then really you can kind of freestyle them. You can kind of make them to your liking. You know, you might look at my zones and be like, that's way too big of an area to play. And so you might want them smaller. Um, these are highly customizable, and you should really just kind of use them to your liking. I've seen some zones that work honestly kind of better than mine, that are way smaller and tighter than mine. So really, it's going to be what you want in your zones. Generally, I only capture the wicks of the candles in my zones, but you may want to capture some of the body. You just saw me on the chart. Every zone is different. That's the hardest question to answer when people ask me, how do you draw your zone? Because like no two zones. I mean, I'm sure there are, but no two zones are really the same, right? I'm trying to capture a whole bunch of stuff in my zones. And your zones and my zones will never ever be the same. They're really customizable, and it's ultimately up to you what kind of price action you want to include in your zone, right? I like to capture a lot of hardcore rejections off my zone. I like to capture a lot of wicks, a lot of volatility. You see them, you just saw how I drew them. My zones only had a lot of wicks in them for the most part, right? That's all I really want to capture in my zone. All that volatility, those wicks, that's what, especially if you're trading options, that's what's going to propel you. That's why you'll notice when I get a position, I can get a 30 to 40% move in less than 5 minutes because there's a lot of liquidity in the zone, right? So that's why you want to include big moves up and big moves down in your zone. It helps remove bias when price enters your zone. You can just play the price action and trust in your zones, and trust that price action here in this zone is going to be really good. So pay attention, right? I generally like to start on the 1 hour and pull up a month's worth of price action. You can go further or stick to more recent data. I'll show you two examples. There's actually a crypto I've been trading back and forth, GMT, where I've just been trading off of 15-minute supply and demand zones that I found in the 15-minute that I found over the past like maybe 3 weeks worth of data. I'm like maybe a week's worth of data, and they've been hitting. They've been hitting. So really, they'll work on any time frame, just as long as you have a decent amount of data. Let's see. Oh yeah, on this, I'm sure this is way too small. But right here, I drew a zone from the top of the wick to the bottom of the wick on Google because it captured this huge move down. And onto the left, you can see it captured some of this move up and some of this move down. Right? Oh, here's a zoomed in part. I didn't even notice I did this. My bad. So see right here, I started from the top of the wick right here to the bottom of the wick. I just showed you guys on the chart, right? But that's like my general zone. Just the top of the wick to the bottom of the wick. Let's see here. I just showed you guys this on the chart too. So on this move up, right? I'll draw your guys' attention right here. On this move up, I drew my zone from the bottom of this wick to the following wick, to the next 10-week bounce, right? So it really only captured 25% of this doji, this pin bar, this indecision candle, up to the next 10-week bounce. Again, these are why my zones end up being a little, they're like, wow, these zones are hitting because I'm only capturing bounces, I'm capturing these wicks, these volatile areas. All right, so this zone, again, we're looking at Google 1 hour time frame. On this zone, I started all the way to the far left here, right? I started from here and I stopped from here. I stopped right here the next time we bounced, right? And then I looked over to my right and I dragged my zone down a little bit to capture this tweezer top and a little bit more of these wicks. Again, these are why my zones and your zones and everybody's zone should be slightly different, because it's going to be about how you want to, what kind of price action you want in your zone. How much area do you want to give yourself? It's highly customizable. Some of you may look at this zone right away and be like, that's way too big of a zone. Again, you can tighten yours up. I dragged mine down to capture this tweezer top. I captured this wick, and not only that, but it's a tweezer top. So I'll take that. So again, you can see this zone captured downside and upside and downside, both. Excuse me, sorry guys, I didn't do that. Oops. All right. So let's just stick with Exxon. And this is where I just wanted to chart up a whole chart real quick for you guys. Kind of show you guys my thought process. So here you see Exxon. This is roughly a month's worth of price action here. Grab this. All right. Regular trading hours on. Let's grab a rectangle and let's start at the most recent price action, the most recent move down. So as I'm building this zone, I'm just starting right here, right? I'm just starting right here and covering the top of the bottom of the zone. At the same time, I'm looking to the left here. And I'm seeing what this zone captured. So this zone captured this huge move down. It captured some of this consolidation, but really it's missing this all-time high stuff right here. So what I'll actually do is I'll start right here at this wick, this kind of all-time high wick, and I'll take it to the very next time we bounce to our most recent price action. All the way over here. See that? And now I like that much better because we captured this. We captured this evening star here. We captured much more of this. See, actually, we captured the meat of the move here. See that? And this is also where we stopped off this huge move up. All right. And that's less than $1 zone. So I really like that zone. Let's keep going. All right, so let's look at our most recent day. This is today where we bounced. We definitely want to capture this, right? So let's grab our rectangle. All right, let's build a zone right here from the bottom of this wick to the top of this, to the top of the wick, bottom of the body here. And let's look to the left and see what happens. All right, I see we captured this. I see we captured this. I see after this huge upturn, we stop here, bounce up off it. So right away, I want to capture more. I want to capture, see this bounce right here, I want to capture that. And so far, that's still less than 25-cent zone. Okay, let's look to the left here. So now we captured that, we captured that bounce, right? And I'm looking to the left, and we captured this little bit of consolidation, this move up, and we captured this huge move down. Let's keep looking to the left here. We captured this move up. We captured this move up right here. And it looks like we captured even more good stuff. Yeah, I didn't want to go back any further, but look at that. Look at that. This zone. This is what I mean, guys, when I say institutional and professional traders will leave their limit orders in for months. Because look, the further back I go, see, look at this wick right here. Look at this. Like these zones, this is why these zones hit. And this is what I mean when I say institutional traders, they'll just leave their limit orders in, and they'll just chill. So it's really, really got to think like an institution when you trade these. So let's keep going here. So we came down. All right, so I'm looking at this huge move up here. Let's see. So I think I'm going to start building my zone right here at the bottom of this wick. And I'm going to take it just the next time we bounce, which is these two bodies. And I'm looking to the left here. Again, I'm looking to the left. I see we captured this huge move up. This is where we bounced, right? Oh, actually, we just did this zone. I just did this zone. Using this zone, another last example. That's funny. Okay, let's keep going here. Okay, yeah, we're gonna need some of that. Okay, so next thing I'm looking at is this huge move up, which we also have this huge gap up, right? So let's start building our zone. Let's grab a rectangle here. Take the whole wick. So far, that's about a 43-cent zone. I'm looking at this bounce though, right here. Now this is kind of a big zone, 104.11 to 104.75. But let's see what we captured here. See, we captured that. We captured all of that. We captured that too. Okay, so see, some of you guys might be like, that's way too big of a zone. You guys might want to tighten it up. To me, even though it is kind of large, I'm going to keep it. Let's see, we captured that huge move up. We captured that good consolidation. We captured that. We came down. We kind of dojied off of it right here. You can see. That's where we started. Big pounds. Let's see, we captured this. Okay. All right. Yeah, I think I'm gonna keep that. Okay, that's good. I might go back and fix that. We'll keep going for now. Let's see. So we captured that. We captured that. All right. So next thing I'm looking at is this huge move down. I want to capture that. I'm also looking to the right now as I'm building this. Let's go ahead, grab our rectangle and start building this zone. I'm looking at this huge candle here and this huge wick. I want to start from here. And I'm going to go to the very next candle bounce, which is right here. And I'm looking to the right again. See, with that, we captured a huge move down. We kind of came up, and funnily enough, this hour candle came up exactly to it and rejected, and then we eventually still kept moving to it. So I'm going to keep that there, and I'm actually going to go ahead and drag it up and capture that gap as well. There we go. I like that better. Damn, that's very, yeah, I like that. I like that zone. So we captured that. We captured that. I'm looking to the left. We also captured some good stuff. We captured this huge move up, right, up, down. So now we see a nice little trading range, right? We see a nice little trading range begin to form as we make our zones, right? Look at this nice little trading range.
Excuse me, not to interrupt you, but
oh no, you're good. No,
are
please.
okay, are we doing major zones and like, because I see all the different zones, but I'm trying to figure out, is these major zones, minor zones, um what ticker symbol and time frame? I'm
Yeah.
just trying to catch up. I'm just trying to catch up
Oh,
to see where
okay.
we
So
at.
yeah, I got you. Bro. So these are on the 1 hour time frame. We're looking at
Okay.
Exxon. I chose Exxon because honestly, it's been running lately. And we're kind of getting to all-time high territory. I would say these are major zones because they're on the 1 hour time frame, and these are the ones that I use to day trade.
Okay.
I will show you some ones I found on the 15-minute that I use to day trade as well. These are more for scalps.
So if I may ask,
Sure.
okay, how would you start the day off and then do the major zones on the 1 hour and then go from there? Like, how would you go from there and pick your the way you're going to trade that ticker symbol for that day?
Okay. So at the end, there are going to be some trade examples, but
Okay.
for the most part, my zones are drawn prior to my trading day.
Okay.
Yeah. So, but like if you wanted to day trade something real quick, I'll show you something I found I'll show you some zones I found on the 15-minute using like data from the past week or so. Um, in fact, I'll just show you right now. It won't take too long. Let's see here.
So this is pretty much swinging.
No, this is day trading as well. But like if you wanted to like start your day, right? And just start trading something with no fresh zones. So like this is what I did for GMT. See these pink zones? These are just little quick zones I drew on the 15 minutes of scalp. This is fresh.
Okay.
Yeah, these pink zones, like I woke up, zone was like the chart was fresh. I charted it up in like less than a minute, and I started trading this range back and forth. I was trading these ranges all back and forth, right? And see these are all zones on the 15-minute, and they've been hitting, right? Just real. I drew these in 5 minutes using like a week worth of data. So I'll show you how to do that after the presentation.
Okay, thank you, man.
No problem, no problem. So let's go back to Exxon and finish charting that. Again, I just showed you like little 15-minute scalps. These hour zones, these are zones I'll probably be using for the foreseeable future. Because again, these zones, they last for a while, like my SPY zones, like my Ethereum zones. I'll draw them and they just keep working, you know. Once you draw them, like you should just I mean, look, I'll tell you, like, at the end of the month, I'll delete everything and redraw my zones. But they tend to just work. You know, look, I mean, you can just look at the chart and see for yourself that they've been working. Right. And actually, this is actually almost done here. So I'm gonna go ahead and grab this little bit right here. Would that be too big? I don't think so. So I'm looking at this doji right here that started this huge uptrend. And I'm looking right here. I'm looking right here. So let's start at this doji. And go to the next time we bounce. Let's drag it up. No, that's gonna be too small. Or that's gonna be too big. To me, that would make the range too tight to day trade. So this is about $1 range. This is good for day trading. All right, and let's do this one right here. So I'm looking at this huge downtrend here. I'm also looking to the left here. We see this gap here. So let's start. I'm gonna grab my rectangle. Bam. And so I grab this huge wick and I'm gonna go ahead and drag it up and capture that gap. All right, so we captured that. Ended up being a nice range there. And actually look at that, we captured this huge bounce in that one zone. All right, that is Exxon. I think Exxon's ready to go for day trading. So my setup for this, I mean, we know that this zone right here is all-time high territory, and all this stuff right here, I wouldn't trade. I wouldn't look at this until we got to the top zone. So say if I wanted to play this on Monday when we open up, if we open up in this zone, I'm going to be looking to take it short actually, because this is all-time high territory. But I'm ready to be proven wrong. If we break through the zone, I would wait for it to break out a retest and confirm it as support to take a trade to the long side. But honestly, that at that point it's all-time high territory, and I don't know how to trade all-time high territory. So that's how I would trade that. Let's keep going back to the presentation. If there's any questions, again, feel free to unmute yourself. Don't feel like you're interrupting me. I'm happy to answer any questions. Let me just give this one last look here. I am going to be day trading Exxon because we're at all-time high territory, and I'm expecting a rejection here soon. Okay, oh, good. All right, let's keep going. Now the part where we're all here for, how to trade supply and demand zones. It's fairly simple, actually. When price enters a zone, it's likely to react in a big way, one way or the other. On a trending day, look for price to consolidate in a zone and take a position in the direction of the trend. Today was an uptrend day. You saw on SPY, there was multiple times where price consolidated in the zone and you could have taken a position. On a ranging day, look for price to consolidate in the zone and take position in the opposite direction. A ranging day is when it's 10 o'clock and price has just been going back and forth between the zone. At that point, your risk to reward is really good. Ranging days are actually some of my favorite days. You always need to be aware of a reversal though. As you can see, price likes to react strongly in the zone, and you will find yourself in a position of top ticking or bottom ticking a market reversal. I mean, that's a good thing, right? So, you know, trade smart, right? You know, the price reacts strongly here. Always be aware that the price might reverse here, or, you know, you can take.
Gotta go buy some.
What was that? I'm sorry, was that a question?
Where you gonna be at?
Hold on.
What day on Tuesday?
All right, I just muted everyone. Feel free to unmute yourself if you have any questions. All right, let's keep going here. All right, so supply and demand is meant to be a base or a supplemental strategy. For me, it's my base strategy because these zones have increased liquidity. You know that they have increased liquidity. Your current trading strategies will work much better when you use them, right? Say you're a trend line breaker, you use RSI, you're just a price action trader like myself, common candlesticks and candlestick patterns, they'll be much more significant in a zone. Say you see a bull flagging forming in a zone, it's much more probable that it will break in a big way, right? I'm sure we've all gotten into a bull flag break and we don't even know it, but we're in the middle, we're in between zones. The bull flag will break, yay, and then you'll only grab like 10-15%, and then it reverses on you, right? I'm sure we've all been there, but if you see a bull flag breaking in a zone, it's much more likely to break in a big way and take you much further, say 30 to 40%, right? Like a morning star at the bottom of a downtrend, that's much more likely to play out if it lands in the zone, right? Say there's a huge downtrend, it lands right in your zone, and you see a morning star candle play out on a 3-minute, 5-minute, 10-minute, whatever your favorite trend line is, your favorite time frame is, then it's much more likely to play out, right? Let's see, so like you're a trend line breaker, right? I know a lot of people are. If you see a trend line break in a zone, it's much more likely to have follow through, right? That's when you get your 50% trend line breaks in less than 2, 3, 4 minutes, right? EMA crosses, tests, bounce, they tend to be stronger and they make for really great entries. I am an EMA trader. I'll show you some, if you guys have seen me trade live, you see me trade the EMAs. All right, so what you guys see in front of you here, and at this point, if you guys can't see the screen or if you guys aren't paying attention to the screen, I would direct your attention to the screen. I'm going to show you guys a bunch of entries, right? This is SPY on the 3-minute time frame. Let's look to the left here. I'm going to direct your attention to this trend line break, right? We're in a downtrend, we're in a downtrend, trend line broke, and you entered right here. You make your scalp, and this is where you make your 30, 40, 50%, right? And again, we're in a downtrend. Here's a morning star on a 3-minute, right? Look at that. You see this morning star form. If you're educated in candlesticks, you would take that, correct? And here's another one. See this trend line from here to here? This trend line broke. You could have had an entry here, and look at that. That's 30 to 40% for sure. Here's a bull flag, right? A bull flag in a zone. You could have entered on this right here because a bull flag is forming and it's about to break. Here's the bull flag breaking. If you're a breakout trader, you could have gotten in on this candle and bam. And here we are to my favorite. Here's my favorite, the break of a zone and the retest. I would enter right here. I would try my best to enter while it is wicking. As soon as I see price come down here and forming a wick, that is me. I'm getting in. This is probably a lot of people's stop losses. There's probably a lot of people that got in here, set a stop loss here, or set a stop loss here, got stopped out here. That was actually my entry. I'm sure we've all been there where you got in on the break, set a stop loss in what you thought was a good place. Right here, you got stopped out. I took the trade and I took it, to 100%, right? That's my favorite. That's my favorite. So as you can see, once we're in a zone, your strategies will play out in a much more significant way, right? And to top it all off, this is an inverse head and shoulders. If you guys know, that's a really strong bullish pattern right here, all happening within a zone. So let's look at some real trades that I took. All right. So this is the SPY 3-minute time frame. Price came down, it broke a zone. I'm not going to get in. I should have got in, to be honest, but I'm not going to get in until this candle right here. We came up and retested this resistance, right? we retested this EMA and we couldn't even make it to here to my other EMA. So I got in here. I got out right here on this support line. This is a 4-hour support line. I took that for 30%, but as you can see, you could have taken this zone to zone, right? I was in this trade for roughly 9 minutes. So kind of a guess because 3, 6, 9, I got out here, so like roughly 9 minutes, right? 30%. It was easy, stress-free. All right, let's see here. This is Amazon 3-minute time frame. So this was actually this morning. I was looking for an open range breakout, right? Amazon opened in a zone. If you're still here, the person who was asking me what I would do. So everything is already drawn out, right? If price opens in a zone, right away it has my attention. Today, Amazon opened in a zone. So what I did was drew a Fibonacci on the first 3-minute candle right here, right? And I waited. Here's the breakout down, but I didn't get in because I get in on retest. And we never, when we retested, we just came back, right? So we came back, we broke out here. And once we retested the 0.618 Fibonacci, that's when I got in. Again, I got in as this wick was forming and I exited right here. This is an open range breakout. So I'm not looking for like 100, not looking at 100, 200%. But by the end of the trading day, this trade made it to the next zone and the zone after that. And it was sitting at $3 from my 71-cent entry. Ridiculous. So that shows you like when price is in a zone, it's about to move in a big way. I should have held, but we've all been there too, I'm sure. If there's any questions, feel free to ask right now. I'm gonna have a sip of water here. So this is a trade that actually one of our members took, BW. BW, are you here? Can you talk right now? I know he was going to talk in at 7 o'clock, a little bit early here. He must not be able to talk. So I'll go for him. So BW took this trade, right? XLE was forming a bull flag on the 10-minute, right? Very classic setup, right? Not only that, it was on a larger time frame. His entry was right here, and he took it to the next zone. Same thing here on the 1 hour. You notice the 1 hour was forming a bull flag in the zone to get to the next zone. Not only that, but it's 1 hour time frame. For some reason, wick down here to the next area of liquidity before coming back up and doing that. So that's kind of cool. All right. This is a trade that I took for 200%. I was trading the S&P 500 on the 15-minute time frame. I entered as we broke out of the zone over here, and I didn't chase it short just yet. And if I would, actually it was futures, so I could have held, but we came back up. I noticed all these selling wicks right here on top of, we're getting rejected by my ADMA. And we were just getting rejected. And this is when I got in right here. I know we're heading down, we were getting weaker and weaker. I entered in on this wick right here. And you can see for yourself right here. This was more of a swing trade. The trade time was about 12 hours. I took it for 200%. One of my best trades of all time. And it was zone to zone. As you can see, these zones will they pay you. Price will just travel naturally towards the next area of liquidity. All right. This is a trade that I took literally minutes before class. Classic trend line break, right? Ethereum was forming a trend line on the 1 minute. Trend line broke. It came back up and I got in. This line right here is the 0.618 Fibonacci. And at the same time, it was getting rejected by this 8 EMA. So this was my entry right here. Took it all the way down. This is my exit right here. And we got this morning star. I haven't looked at Ethereum since, but I got about 40% out of it. Trade took about 20 minutes. It was easy, stress-free. You all know trend line breaks. It worked. So at this time, we'll find some setups. Let's give it a try here. Thank you, Milena. All right, again, if you guys have any questions, feel free to ask. We're gonna find some setups here. Not live just yet. We'll find them. We'll find some live ones after class. You guys want to click around, and I'm probably gonna trade some crypto. We'll do this. I can go over here. Let's look at QQQ. I haven't traded QQQs in a while. Let's see if we can find some setups. Let's go to the 3-minute, my favorite time frame. Let me get my indicators up. I use the bull market support band. I use volume. And I use the 8 EMA. That's all I need. Now let's find some setups. So let's say today you got in late. You're like, oh crap, we've been running up all day. I'm never gonna get in. I missed the move, blah, 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 blah. Oh, wait, price entered my zone. What's about to happen? Well, we did this bull flag forming right here in a zone, right? Bull flag forming in a zone. Look at this buying whip right here. You could have gotten right here. You could have gotten on the confirmation that we were getting it, that we were holding support right here. You could have gotten a trend line break, right? Again, since we know that there's much more liquidity, you're going to get much more bigger move. So this was at the end of the day, 11:42. You could have got in on this for you Webull traders. You could have grabbed a 0 DTE off of this bull flag and sold it at the end of the day for much profit for sure. Let's keep going. A lot of messy price action here. Kind of messy. I personally wouldn't have found an entry here. I'm sure some better traders than me could have. I'm sure if we broke this down to the 1 minute, someone could have got a trend line break off of here and taken it up. Let's see here. Here we go. So here's what I mean by capturing the meat of the move. This was 645, 648. Here's a 650 candle. This is when you should be paying attention because price just broke out of your zone. I personally wouldn't chase until I confirmed right here the price is confirmed support in my zone. I would try my best to get in as this was forming a wick. Because we know, if the wick is on the bottom side, we got a lot of buyers. I'm seeing a wick form in my zone. I'm seeing it holding the ADMA. I'm seeing it hold my bull market support band. I'm going to try my best to get in. At this point, if I got in right here, my risk to reward is great. And I mean, if you were here today, you could have just held us all day, right? This is again what I mean by you get in a zone, you're much more likely to capture the meat of the move. So if you ever look back at a chart and you're like, oh man, I missed it. The supply and demand traders did it. the real good one. Let's see here. Let's find another one. And if there's any tickers you guys like, I might have them charted up. In theory. Let's see. Kind of messy there. I don't think I would have taken a position here. But you can see it. You can see it here. Taking a position somewhere in the zone, been good. I might come back and fix this. Let's see. Oh, I like this setup right here. Here's a really nice short setup. Let's see here. So it's a little more risky, but I like it. Because the price did kind of break out here. So I'd be paying attention. I probably wouldn't have got in here or here. This is when I definitely would have gotten in. Once we came up, we broke down, we came up and rejected the bull market support band, the top of it, the bottom of it, and the 80 at the same time. I would have taken a position. And we'll look for one more. And again, you guys can see these zones pay. Here's a really good setup. Honestly, this one's really good. So we see this head and shoulders forming in my zone, right? Coming down, coming down. So this is when I'd be interested. We broke out of the zone. I wouldn't chase until we confirmed that this is going to be resistant. 1, 2, 3 wicks, all 3 selling wicks. So I would have tried my best to get in on either of these wicks and taken it to the next zone. And again, there it is, the meat of the move. These are how you get those 100, 200%, right? You don't even pay attention to price until it reaches the zone. And here, again, if you got in late, here's 8 a.m. You're like, oh man, I missed the morning dump. Like, oh crap. What am I gonna do? Oh, price entered the zone. Price broke out. Wait for the retest. Retest. It confirmed the zone is resistance. The ADMA is resistance. Get in the position here. Take it down here, and you're good. You're paid. All right, let's keep going. I can do this forever. Supply and demand trading, honestly, it's the way. Let's keep going. Let's see. Yo, BW, if you're still here.
Yo, what's
you
going
here?
on? Yeah,
Oh, awesome. Hey, you want to go over that trade real quick?
yeah. Let me
Okay.
share the screen.
Good. So we got a special guest speaker here, Mr. BW. I'm sure you all know him. There you go. Here's the slide. I'm sure you all know him. I'll have him talk through this trade real quick.
Oh, can I share my screen?
Yeah, I think so. Give me a second here.
Hopefully it doesn't ruin the recording, but
No, you're good. Multiple participants can share simultaneously. Okay. So go ahead and share your screen, B-dubs. I gotta chat in the meantime. Thank you, everybody. I really appreciate the feedback. You guys are super nice. BW good?
yeah, you guys see my screen or no?
Let's see here.
No, it's still Raj's screen.
Advanced sharing options.
It says I'm sharing, but
Personal.
Oh, you know what I had to do? I had to actually go in and there was 2 screen shares. So I had to like click on it and then move. Got it.
okay, cool. All right, so thanks, Raj. Thank you for hosting this, and thank you for giving me the play today.
Oh, anytime, bro. Please.
Yeah, that was pretty fire. So basically, all right, I had this on my watch list. Had XLE. So anybody know what XLE is? You guys know? Are you guys familiar with it? ETF. Can I get a 1 in the chat if you guys know what XLE is?
Let's see.
Bridget says energy. Donna says 1. Okay.
Thank you, Bridget. Yeah.
All right. So XLE. All right. The biggest holders are Exxon Mobil. All right. Also holds Valero, Shell. I think Chevron. Basically all the oil. MRO. All right. If you guys played Zay's play today, MRO. So basically, yeah, it has been in an uptrend. So if you guys know, this is also known as a rally, and we got a base. The consolidation is a base. We got a rally base drop. This drop is formed. All right. The thing I love about supply and demand zones is that it identifies the structure. We have higher lows. All right. So it's a rally base drop, but this drop is not as big as this rally. And now we're on a drop base rally. So we're pushing up. All right. As we can see, all right. We had 1, 2, 3, 4, like 5, 6 touches, right? From down here, it's $82 all the way up to 91. It's a big rally. But I think 2 days ago, we had a scare. I think it was on Wednesday. We had a scare where we see that we have a bearish engulfing that formed right here, a bearish engulfing. How do we know it's engulfing? Is because this candle right here, right? It was this Wednesday, the highs took out the highs, and then the lows took out the lows of the previous day. The setup that I really liked about today is that on Thursday, what it presented us was that we had a green 2 up, right? We had a bearish engulfing, and then we gapped down and we pushed up right at the support or resistance, right? However you want to take it. This is the support. We break down. We found a base to support down here, and now we broke back above it, right? So the thing that scares us is that we push down here. So what do we do from here, right? So this is the easy play, is that you will take this, since these it was like a small candle. The good thing about small candles is that it gives us, right, an easy thing to identify. So if you break the highs or break the lows, we'll just play that direction. And this support and supply and demand zone, what it gives us is that if we break down and hit here, we could play a push down to try to take out the lows. Or if we gap down, right, we can make a push up, but we know that this is a wall. But so that being said, our goal is to try to take out this high. So we got a 3 down, a green 2 up. So if we can be able to push above here, this zone, right, this supply zone can turn into a demand zone, right? That's our goal. So the morning started off, right? The morning started off, I'm gonna put on the 3 minutes because Raj likes to trade on the 3 minutes. We could see that this is where we closed the previous day. So just keep in mind where this spot is, right? The previous day close. All right, just remember that for later. All right, so when the day starts, all right, we get a push down immediately at this zone, right? So we're down here and we're still, right, closer to take out the highs than we are to take out the lows. So the goal is if we break the highs, then it will be a 2 up. So we are now above previous day, but we're not, right? We're pushing down. So as we push down, this is the first sign that we should look at, right? We get an actionable signal. We get an inverse hammer, right? We get a rejection here at the 50 mark of the previous day. I didn't play this part. At this point, I was like looking at other things because I was like, oh, I think that oil might dump, right? But I missed this move because if you see this, we break the 50 here, which means that we're going to push above and take out this high of where we opened. All right, so I missed this whole move right here to the upside. But at this point, take out the previous day high. So now this is a daily 2 up. All right, again, I was looking at other things, but I did have this on my watch list. That's why I have these levels set. But if you notice right here, we get a reversal candle. We get a bearish engulfing again, right? We get a 2 up and then we get a 3 down, back to the zone. So the thing is though, if this zone holds, then this will be a support. Another support is this previous day close, but we already identified here that we have a support right here, which is in the middle of the previous day. So our goal is to try to hold above here now that we broke above the previous day high, and we're going to use this zone as an entry, right? So the price pushes down. Okay, this looks like a bear flag, right? We got a pull, the flag, and it breaks, right? Also a trend line break, pushes down, all right? So right here was the telltale sign that this support is holding. Why? Because this area earlier that I mentioned, the previous day close, as well as this overall zone that I was identifying, right, where we had numerous bounces, is holding. So at this point, I think Raj noted, I was like, hey, Raj, what are you looking at? He's like, XLE. And I was like, oh, yeah. So I peeped back at it after this happens. I was like, oh, we kind of formed higher lows. So and in addition, right, so the multiple confluence, like Raj was saying, not only do you use the zone as a support and resistance in an area where you can enter trades as close as possible, but if you look at the RSI, right, now we are bouncing back above the midline. So this is looking a little bit more bullish. All right, we're breaking here. And another thing that we could look at, right? What time is this? We get one more. All right, 7:57, right? Another thing that we could look at, which I think Raj was also mentioning, is that we have what appears to be a trend line. Right? We have a trend line, support, higher lows, and this is a zone, all right, that we identified on a bigger time frame. And the RSI being that we're entering the top area, which is bullish area. That's the multiple confluence. I entered at 8:01, so let's just skip over. All right, I entered right here. And as you can see, having a zone gives you a clear stop loss. So if you're entering a trade here, right, your clear stop loss could be right here, this level right here. All right, obviously you don't want to enter a trade unless you have a target. So I think I had my target as from over here, somewhere over here. No, somewhere over here. One of these pivots, right, was my target. So let's see where I end up. I exited at 8:15. So let's see where we go to, right? Immediately having these multiple confluences, RSI, trend line, and the supply zone, right, as support, this trade was actually a stress-free trade. Right here is 12, one more candle. I exited right here, right? Another thing bad about the RSI that I'll say is that you can move this up once you move this up. Is that you look at this and you're like, okay, I need to get out. And that's what I did. I think I got out because of the RSI was way overbought now in the 3-minute time frame. But unfortunately, it ran up just a little bit more. Right, that kind of hurt my feelings. But I mean, it came right back down. So I'll be happy about this trade. But Raj pointed it out, XLE, and I looked at it, and all these things lined up. So and this was also one of his levels. We kind of chart sometimes together. I'll look at his charts, and I saw that he had a zone that was, I had a line, a support line, and he had a zone. So I kind of just covered the area to give me a better area where I can find a bounce, right? So if it was just one line, you can't really tell. But this zone helped me identify that if we get out of here, and now this was the resistance, now is support, that'll give you the confluence to enter. So this trade I held for, I don't know, 3, 6, 9, 12, 15, all right, the 15 minutes. It was
Awesome.
like, it was like 25%.
Fire, bro.
Yeah, that was like
Fire.
the most awesome trade. I literally hopped on that trade and like it was green the whole way. So thanks for that.
No problem, no problem. I'm happy. I'm happy that you trusted my now. So, yeah, I'll keep sharing. I'll share my screen.
Okay, I'll hop off. But thanks for letting me share. But yeah, this
Oh
was
yeah,
basically
anytime,
an example.
anytime. I'm happy. Dude, freaking
Yeah,
awesome. I'm happy you hopped on, bro.
I should have sized up on here though. Dang.
All right.
All right, thanks guys.
All right. Can everybody see my screen?
Yeah.
Okay. Cool. So I actually want to go back to that trade, BW's trade. I want to show you guys something here.
Oh, yeah, but I kind of went through that trade really fast. This is JPM. I kind of went through this trade really fast, but I hope you guys kind of got an idea of how I came up with that trade. So yeah, hopefully if you guys have any questions, feel free to ask me.
Yes, please, for sure, for sure. BW's a freaking fire trader, man. I'm telling you. We've been trading together for a minute now. So yeah, actually where you got out was perfect. On the 10-minute, it formed a morning star right in my zone. So if you were on the other side of this trade and you went short here, you could have gotten paid the whole way down. And JPM is kind of a slower mover, so you can actually sit through some of this pullback. This is a 10-minute time frame as well. This is a crazy candle on 10-minute time frame. Actually, I think I would have gotten out right here on this 10-minute candle to see this 10-minute candle came down in this zone and this zone at the same time. So I for sure would have gotten on my position there. Wow. Yeah, I just wanted to add to that. So your exit was perfect. And it really
It was on XLE.
XLE. All right, put up JPM. Let's see. I think I saw the same thing So yeah, same thing on XLE. This is your entry, right? It came up and it came up right to a zone. 10 minutes. Bam.
Nice, nice.
Yeah, yeah. These zones, I'm telling you guys, if you use these zones, this is how you get the meat of the move. These are how you get your options contracts to move. Because you see price, it moves in a big way when it enters a zone. If you grab an option contract in between zones, I'm sure you can make your 10, 15, 20%, but it's going to be a slow grind. If you get in the position in a zone, you can be part of these big candles. If you ever look at these big candles and wonder, oh, how did I get in? It's supply and demand. You get in when the institutions do, and you get out in that big candle. It's all supply and demand. Let's go back here. So we did the Ethereum trend line break.
Raj,
What's
Raj,
up? What's up?
find a fresh chart. Let me see how you do that.
He just did one.
What?
He did one on Zom earlier, I think.
Yeah,
He
yeah.
did a
I
naked chart.
started up Zom. But after the class, I'm happy to go through another one. And
doing-
I just saw that in the chat. Yeah, after the class, I'll show you my bull market support fan indicator.
Are you doing it the same way every time? Are you doing different? Because I'm still getting confused. Are you doing different zones for different time frames? Are you doing?
So for my major time frames are gonna be in blue. If I find them on the hour, okay, so I think I know what you mean. If I find them on the hour, I'll show you again after class, but if I find them on the hour and I'm having trouble finding the origin of the move, I'll go back to that slide actually. All right, Luther, it's Luther. Return to meeting. Your screen sharing. Okay. Why did this happen? Hold on, guys. Having technical difficulties.
You got a question in the chat, Raj.
Let me restart my monitor here. There we go. Okay. Hey, can you guys hear me? Sorry.
Yeah. You got a question in the chat.
Yeah, Bridget, I'll be happy to go over the bull market support plan. Give me till after the presentation, and I will be happy to show you how to go over the bull market support plan. It's one of my favorite indicators. I've been using it for years. Let's see. All right. Oh. Oh, let's check out this.
Man, your zones are so crazy, man.
I know.
They work. They could take it zone to zone, and you just find your candlestick patterns, your 1, 2, 3 candlesticks setups that help you get from one zone to the other. So
Sorry, I needed to restart my PowerPoint. Luther, are you still here?
Yeah, I'm right here. I'm just, yeah.
Okay, so I'm pulling up the slide, and what I'm talking about. So here's the slide. So this candle, this huge uptrend, it started on the 1 hour, right? So I want to draw this on the 1 hour, but I couldn't find the origin of the move. Because you see, if you drew your zone on that 1 hour candlestick, see this one on the left here, it wouldn't make sense. It would be super little, right? So what I did was go down to the 30-minute and I looked and it still didn't really make sense. So I went to the 15-minute. And this is when it kind of made sense. And if I can take your attention to right here, I took it from the bottom of the wick to the time that we found. So yeah, I did find this zone on the 15-minute, but I'm treating it like I found it on the hour because I did find it on the hour, but in order to find the origin of that hourly candle, I needed to find it on the 15-minute, if that makes sense. I needed to find the origin of that 1 hour candle. because if I just took that wick, it wouldn't really, it would be way too big. Does that make sense?
I don't know. I'm just trying to, so you're using the candle, but you're using a wick. You're waiting for a rejection wick to come. See, that's where I'm getting confused at. Maybe I'm making it overcomplicated. I don't know. I was just see.
Yeah, so here's something I found on IWM. So the next rejection candle, I'm not taking the next rejection candle, I'm taking the next time it's found. See here on the hourly candle on IWM, this was the hourly candle that started this huge uptrend. I
Yeah.
couldn't make a zone on this hourly candle because it would be way too small. So I looked down here to the 30-minute and it kind of started making more sense. And then I took it to the 15-minute and that's when it made the most sense. So what I did was take my zone from the bottom. This is this candle right here. This is the candle. I took it from the bottom of this wick and I took all this and I took it to the next time we found right there. So not that rejection, not that, but this one right here. See, I took it from here to here on the 15-minute time frame. And I'm treating it like I found it on the hour because I did technically find it on the hour. It was this candle. I was trying to find what happened in this hourly candle because this hourly candle started this huge uptrend. So this is that same hourly candle on the 30-minute time frame. And this is that same hourly candle on the 15-minute time frame, right? So this little chunk right here is this hourly candle. So I took it from the bottom of this wick to the very next time we found. And this was found on the 15-minute. See, if I just took that little tiny wick, it would have been way too small. So I found the origin of that 1 hour candle on the 15-minute.
Yeah, I kind of see what you're doing in a way.
Yeah. All right, we're almost done here. We went through all the trade examples. All right. All right. So these are the questions I get asked the most. Number one is, when is a zone invalidated? Sometimes you'll notice that price slices through your zone with little to no consolidation. This doesn't invalidate the zone. In fact, to me, it makes the zone a little bit stronger. It's telling me that a bunch of limit orders are getting filled there at the same time, and price is just slicing through it because of the amount of limit orders that are there. So what I do is wait and see how price reacts the next time it enters a zone. I personally have never deleted a zone. Because none of my zones have been invalidated, because the next time price comes into the zone, it consolidates in a good way, and you'll find an opportunity for entry. So if price goes through your zone once and you're like, oh, well, that zone sucks, just wait until the price comes back to that zone. You'll find your entry. And the best strategy to use in a zone. Again, this is up to personal preference. All of us in here are traders. If you're a trader in here and you have no strategy, I'd be happy to show you my strategy. My strategy is incredibly safe. It's very low, it's very high risk to reward. And it nets me a good amount of profit. Ever since I used this strategy, it's been highly profitable for me. If you're a trader in here with no strategy, hit me up. I'll show you mine, and I'll even take you through it together. We can live trade together, and we'll make it happen for you. So I use the break and retest strategy. I use EMAs and I use volume analysis. EMAs and volume analysis are another class, but I know Bridget asked, so if you hang out after class with us, I'd be happy to show you. And that goes for any of you guys. If you have any questions not pertaining to this presentation, hang out with us after class. So we're gonna be trading crypto. So let's see. You personally might use a trend line breaks. Some people use the RSI. You could really get away with no indicators at all and just play the price action. Just play your supply and demand zones. You know that price is in your zone. Just use the price action, right? What if price is in the zone? Unless you have a specific strategy, at least for me, I stay hands off until price comes into my zone. What you can do is set an alert. Set an alert for all of your zones. Price is coming to your zone. That's when you pay attention. The probabilities really increase in your favor when price is in your zone. After all, we're playing a game of probabilities, and we want to stack the probabilities in our favor. Straight up. And if the probabilities aren't in your favor, if you force a trade, oftentimes in between zones, you just get chopped up. When should I exit the trade when it's going in my favor? You should ideally, every person is different. Ideally, you would just hold your position until it gets to the next zone of liquidity. This does entail holding through pullbacks. Pullbacks are going to happen, especially the further away you get from the bottom. The further away you get from your entry, you're going to notice a lot more pullbacks. But you know, if you hold it long enough, you've seen it yourself, it'll go zone to zone. Holding through pullbacks is hard. We've all been there. I suck at holding through pullbacks. That's why I don't really do it. Let's see. So if you traded your zone correctly, you should have a pretty nice discount, and you should be able to sit through any pullbacks, and you can watch while your trade works out. But you know, every person's different. So when should you exit the trade when it's not going in your favor? Losses happen, but zone trading, our zones will provide us with really good risk to reward. If you're long and price broke your zone to the downside, exit the position. It's not a big deal. Same thing if you're short, price broke your zone to the upside, exit the position. These zones, they're really good risk to reward. Oftentimes you'll get out for like 10-15%. It's not that big of a deal, right? The name of the game is capping losses. How big should I make my zones? It's again personal preference. I know some people who make their zones really tight and that really works for them. I make mine a little bit bigger. I'm sure you guys noticed that because I personally like to capture a lot of good price action in my zones. So I do tend to get greedy. My zones tend to be big, but they work for me. I do cap my SPY zones at about $1.50, but they oftentimes don't go past 50 cents or to 75 cents. I wrote this twice. This should have been how close should my zones be? It's going to be another preference, but you want to have a large enough range to make a good profit when you enter a trade, right? So don't force your zones. Make sure they're a good amount, a good distance from each other. About $1. About $1 will give you a good risk to reward. Especially if you're playing weeklies or zero DTCs, $1 is going to be a really good range. $1 can net you 100% even if you get at the bottom of the zone, right? So price entered my zone. Should I just slap calls or slap puts? When I first started supply and demand trading, I'm going to be honest with you. This is what I did. I shouldn't have done that. When price enters your zone, that's when you want to start paying attention. Don't just slap calls or puts. Blind with slapping salt. That's how you get smoked. Your zones, if you made them right, they contain both moves to the upside and downside. So it really doesn't pay to be biased. And again, that's how a lot of traders get smoked because they're biased. But these zones, because they have moves to the upside and downside, you can't be biased. You just gotta use your strategy in a zone. Utilize your own strategies to make informed decisions and take a position based on the trend of the day. So if it's ranging, just take a position on the opposite side. If it's trending up like today, wait for price to consolidate in your zone. You saw there were multiple times for you to get in today. Use it like that. If you think the market's going to reverse, it's gonna, these zones will provide you a good risk reward if you want to take that bet, right? It'll just be a 10 to 15% loss. I personally will never bet on a market reversal. But again, I can't lie that the trade, it presents a fantastic risk to reward when it enters your zone. You see that your zones can contain market reversals. So again, just keep that in mind when you trade these zones, because you can capture a really, really, really good move. Just stick to your own strategies in the zone, and I promise you, you'll get that move. Just trade these zones correctly, trade them disciplined, and eventually you'll capture that market reversal, and you'll be like, "There's my 100, 200%." Right? Just stick disciplined. These zones will pay you. And finally, what I use. Yeah, I use a variety. I just use price action pretty much. I'm looking for candlestick patterns like bull flags, bear flags. I use trend line breaks. You guys just saw me use Ethereum trend line break. My favorite A+ strategy is the break and retest of a zone. You know, the price will break a zone, it comes back down and holds my zone as support. I really like it when it comes back down and holds my zone as support, my ADMA and the bull market support band. When it holds all three of those as support, I have to get in. Like, no matter what, I have to get in, risk the other side of my zone. And you know, those are my favorite. They pay me the most and they're just stress free because I know that they have the support. Excuse me. I ideally enter on a wick. I always say this, I want to be part of the wick. So that's why I trade on the 3-minute time frame, because you can really see how these candles are going to form. So I pay attention. I see that it's forming a wick, and I'm like, all right, it's forming a wick. I'm getting in on that wick, and I try to get in on that wick. That pretty much ensures I get a really nice discount on my options premium, especially if I'm playing a 0DTE. You know, those pullbacks really hurt theta. So that gives you a really, really good discount. For stop losses, I use a dollar amount. I mean, I know I can use the other side of my zones, but my dollar amounts tend to work well for me, because if it breaks that dollar amount, I know it broke market structure. So let's say I got long at 380.90, my stop will be like 380.25 or 380.50, because I know if it breaks 380.25, then it definitely broke down. If it broke 380.50, then it definitely broke down. For swings and day trades, I'll just use the other side of my zone, stress-free. That might take you down, like depending on how big your zone is. Like my zones, that would probably take me down to like minus 25%. I know some people's zones would never get that big, but hey, to each their own. All right, we finally reached the end. Again, supply and demand is a great starting point to base your strategies off of. We know that these zones have larger than average liquidity. That's why you see those big candles coming out in my zone, because there's a lot of liquidity hanging out there. You know, they provide a really good risk to reward. They often only risk 50 to 75 cents on the underlying asset. It really makes it a good beginner strategy. It makes your losses really small. You know, as long as you stay disciplined, price broke my zone, it went against me, your losses will be very small and you will remain profitable. This is a good beginner strategy. All right. It doesn't replace normal support and resistance though. You know, normal support and resistance, these are your fundamentals. I expect you guys all to know this, right? You guys all know how to do it. If you guys don't, I'd be happy to show you. But every time I'm done drawing my zones, I will always go back to the 4-hour time frame, and I'll just mark out, you know, regular support and resistance. Oftentimes support and resistance, if it lands in the zone, it just adds conviction to my trade. It's another confirmation of my trade. Say all those things on my A+ setup happen, and it happens on top of a support, then that's gonna pay, right? My last point to all you guys is practice. Don't just draw your zones once and be done. I personally try and do it every month, but lately I've been doing it like every week, because I want to get really good at them. And every time I redo them, they work better, because I just, you know, I see different things, if that makes sense. So, you know, practice makes perfect. That the same thing goes for charts. I'm telling you, you can't just draw, you know, that's why you see traders drawing all the time. You gotta just keep doing it. So, you know, practice makes perfect. Oh, that's it. All right. Thank you for your time, guys. Any questions, just hit me up. You guys know my Discord. Let me check the chat here. Oh, what up, Jordan? How you doing? All right, the last question is Bridget. Kenny. Yeah, absolutely. For now, is there any questions? Since I'm about to stop recording here. See here. Doesn't look like it. Give me a second to stop the recording and then we'll hop on live and trade some crypto, right? Because crypto is popping right now. I want to trade some crypto myself. Even trend line breaks are working on Ethereum again. Well, let's go. All right, let's see here. Let me stop recording here. I don't know how. I don't know how. Hold on, let me try this. All right, cool. So I think that's it. Video. No, I'll do that. Oh, there it is. Stop